Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because today we're going to answer the question on everybody's mind: when alt season? Now, it's no secret that I've kept my crypto portfolio quite conservative for the entirety of 2024, holding only what I consider to be the blue chip assets of this market. And that's mainly because I've noticed in previous cycles that the most money is made and the maximum opportunity occurs when Bitcoin enters price discovery and money piles into the space, and piles especially into altcoins. And of course, because I've been saying that my main thesis is a more normal cycle for Bitcoin where we enter a longer accumulation and correction phase so the market can digest the incredible move we've seen over the past 18 months, I really don't want to hold altcoins through that drawdown, because we know that altcoins not only can outperform Bitcoin on the way up, they usually also significantly underperform on the way down. And if Bitcoin ends up pulling back 10, 20, 30%, I don't want to hold altcoins through a 20, 40, 60% drawdown without knowing which ones are actually going to survive and outperform in the next expansion phase. That's also why I've kept cash on the sidelines to be able to take advantage of some buying opportunities if there are some altcoins that are showing signs of outperformance. But as of right now, I'm very comfortable with my current positioning, and I'd rather wait until we get some of those alt season signals, because then it will be significantly less risky to allocate to those smaller projects. So now that we've established why it's important to wait for alt season, in my opinion, before allocating aggressively, a lot of you that have kept up with the channel will notice that this chart looks incredibly similar to one that I released 2 days ago comparing the dollar index to Bitcoin, and we explained how the mania phase in crypto occurs when the dollar goes down aggressively, and of course that puts Bitcoin in a huge expansion. And what do you know, that's also exactly when alt seasons occur. So if we can figure out when the dollar index is going to go down aggressively, we'll know that's also when mania phase is likely to occur. And if mania phase is occurring, that's when we get alt season, and that's when we have the maximum upside for smaller projects. And of course, as I'm sure most of you are aware, this isn't even only a crypto specific thing. We also see the exact same thing in traditional markets. Here we have the S&P 500 in red, we have the Russell 2000 in yellow, and what do you know, when was the Russell 2000 outperforming the S&P 500 significantly? 2020 and 2021, also 2016 and 2017. And when was the dollar going down aggressively, resulting in a mania phase in risk assets? 2016, 2017, and then of course 2020, 2021. So it makes sense that if the dollar is strong and if markets are more risk off because bonds are paying higher yields, or the Fed is tapering their balance sheet or raising rates, that puts a lot more downward pressure on smaller assets than larger ones. In crypto, it's a little bit more due to inflation and risk tolerance. Money is going to be less likely to pile into altcoins that have high inflation rates and have to keep up with all of that supply hitting the market. They would much rather hold things like Bitcoin or Ethereum with their better monetary policy. And then, of course, when it comes to traditional markets, smaller companies have a lot more debt usually, and rates being higher makes it a lot harder for them to finance their expenses, whereas the larger companies in the S&P 500 are sitting on plenty of cash and can just buy treasuries and benefit from those higher interest rates that the smaller companies cannot. So we've established that if we're going to have alt season, we also need to have a mania phase for Bitcoin, which is going to require the dollar index going down. And that's going to put pressure on altcoins and small caps to the upside. And we can finally see some outperformance from altcoins and the Russell 2000. And of course, the best way to monitor when alt season is happening is by looking at Bitcoin dominance. As long as Bitcoin dominance is in an uptrend, there is no reason to pile into altcoins, in my opinion, because alt seasons occur when Bitcoin dominance is absolutely collapsing. And of course, for that to occur, we need to keep an eye on the dollar. And of course, what drives the dollar? Monetary policy from the Fed for the most part. There's also other things we'll get into, like the federal deficit and the impact that has on the dollar. But essentially, the Fed made it clear rates are going to stay higher for longer. until something breaks in the labor market. So unfortunately, until we see something break in the labor market, the dollar index likely keeps working its way up and putting downward pressure on smaller assets against larger ones. And we're not gonna get that drop in the dollar until the unemployment rate gets decently above 4%. In the FOMC meeting, Powell said they would not cut rates more aggressively than they projected unless the unemployment rate went up more than they projected. And with the unemployment rate already sitting above 4% and already crossing its 2-year moving average, a signal that has always called a recession within 3 months, they're likely going to use the unemployment rate spiking as an excuse to cut rates more aggressively, which should put some downward pressure on the dollar. But there's going to be a lot of volatility to survive along the way. And I don't want to have very risky exposure when we're going through that volatility. I want to wait until we get to the other side of it. We see the dollar go down aggressively and then pile into some riskier projects and benefit from the alt season upside. But I do think a lot of investors are going to be shaken out along the way because they're not prepared for the macro volatility that could occur if we see this increase in the unemployment rate continue. We know CPI has been stuck above 3% for a while, and until it's under 3%, the Fed really can't make an excuse and cut rates until we actually see that spike in the unemployment rate. And we know that historically, spikes in the unemployment rate are what differentiate between the S&P 500 going down in a cutting cycle or continuing to go up even though the Fed is cutting rates. In the dot-com bubble, we had the unemployment rate go up right before the Fed started cutting rates, and that caused the S&P 500 to sell off aggressively. Same thing in the great financial crisis. Unemployment rate gets above that 2-year moving average, starts spiking. Even though the Fed starts cutting rates, it's already too late, and the S&P 500 in red here goes down aggressively. 2019, there was no spike in the unemployment rate. It was just going down the entire time. So what does that mean? The S&P 500 was still able to continue climbing the wall of worry until, of course, a black swan event hit. And this time around, I think the main deciding factor is going to be how bad that spike in the unemployment rate will be, because that's what's had the largest inverse correlation with S&P 500 price action. And now there is an argument that can be made that maybe because the federal government is already running recession time deficits, right now the deficit is bigger than what it took to get us out of the great financial crisis, significantly bigger than what it took to get us out of the dot-com bubble. So maybe because these deficits are already so huge, a technical recession where GDP goes negative can be avoided, and maybe that can continue to put upward pressure on the S&P 500. But of course, the only way we're going to know that is by monitoring the unemployment rate and seeing how markets continue to react to that data. But for now, all we can do is monitor rate expectations and see when the market is expecting the first Fed rate cut, which is September as of right now. But of course, that will change as we get new labor market data. It might even change a little bit as we get more inflation data, but obviously the labor market is the thing to watch. And of course, we're going to watch the impact that has on the dollar index, because that's the main asset with an inverse correlation that we want to keep an eye on. Because if we want that mania phase for Bitcoin and that alt season, we need the dollar to get devalued significantly to put upward pressure on those riskier assets. As for TA, Bitcoin doesn't look amazing, but it's still above its 20-week moving average, so nothing to worry about quite yet. Maybe we end up getting a nice bounce off that level when we get there. The S&P 500 still looks incredible, obviously, just an absolute price discovery, climbing the wall of worry and grinding higher. And I think these deficits from the federal government have a lot to do with that. And of course, some of the AI excitement around the larger companies like Apple, Google, and Nvidia are having a huge impact as well. Ethereum has seen a decent bounce recently, probably because we keep getting news that it's likely those spot ETFs are going to launch within the next month or so. Solana still looking pretty weak. This might be our first close below its 20-week moving average for a while, which makes sense because we are expecting altcoins to underperform, especially if we end up having that normal cycle scenario. So Solana is kind of reflecting that in its price action, but it still hasn't put in a lower low on the weekly chart quite yet. So 138-ish is a very crucial level to watch, but I'm happy holding this 30% allocation through whatever drawdown we end up having because I like what I'm seeing with the amount of users using Solana right now, and I think it has a very good narrative for the next expansion phase. But for now, we'll continue to monitor the data and the charts to try and be prepared for when this alt season gets started. I still think it's at least a couple of months away. And just keep in mind that Bitcoin correcting will just mean that altcoins are going to correct more aggressively. But in the longer term, we do expect Bitcoin to continue going up as fiat currencies around the world continue to be devalued, just like what we've seen with the S&P 500 over the past 100 years. Because of course, we do not expect the national debt for the US or around the world or money supplies around the world to start decreasing anytime soon. If anything, this is a blip in the road before we have the next expansion higher, because when in doubt, governments always print their way out. But anyway, let me know what you expect. Do you expect alt season sooner? Maybe if somehow we get some surprise that results in this left translated cycle, we could have altcoin season sooner than what I have laid out here. We're going to have to wait for Q4 of this year before altcoins can really get the party started, but would love to know what you guys expect. As always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.